Jerome Powell is watching this market. He knows what he wants. He probably does not want the market to skyrocket back to all-time highs on the S&P 500. Is my analysis still showing? Is it going to still go down to the 12 to 13,000 level and potentially 9? And I want to stress that as of now, the larger time frame technicals are still showing that.
In today's video, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts as well as his predictions and price targets for Bitcoin. Soloway shares his opinion regarding high inflation rates, the stock market, the crypto market, and the Fed. Before listening to him, please ensure to smash the like button and subscribe to the channel.
We're looking at what the market is doing, what the market is focusing on, what the market is setting up for in terms of trading opportunities. So what I want to do today, folks, is basically look over the markets. We're going to keep an eye on any economic news. We're going to keep an eye on some earnings reports that came out this morning, and we're going to look at general charts that are moving. I have some great trade levels. I have some awesome potential trade setups that I want to share with you this morning, and we're going to get right into it. All right. So the bottom line is, let's flip over to some chart action here. This is the S&P 500 or the SPY. Remember, the SPY is the tracking ETF for the S&P 500. Now, right now, the futures are trading up just a little bit, not much, but just a tiny bit. And basically what we saw, this is the daily chart. So we had the sharp run up in the S&P 500. We took out this downsloping trend line here, right? So this was a long-term downsloping trend line. We broke above it. We continued up. We didn't fill this gap just yet. And so I do think we have to be on alert that there may still be one more push up in the stock market, all right? And we're going to find out today with Jerome Powell speaking a little bit later. That's a major news piece that you want to follow as well, because again, Jerome Powell is watching this market. He knows what he wants. He probably does not want the market to skyrocket back to all-time highs on the S&P 500. So does he try to put some cold water on it to keep it from doing that? Or is he just as dovish as he was just last week when they reported their latest policy statement? All right, bottom line is, keep an eye on today's price action going into the Powell comments for his speech. And again, if we do see a big pop, your next major resistance on the spiders is going to be the 422 level, all right? 422 on the SPY. That equates to about 4,220 on the S&P 500. All right, a couple things I want to talk about here. So number one, we got to look at natural gas. All right, I know a lot of you guys are intrigued by what's going on in natural gas. I continue to hold a position in natural gas. Natural gas has bounced off the pre-market lows. Yesterday, we had a nice little end-of-day rally down here. Let me show you the 10-minute chart. So this was your end-of-day skyrocket here. From down here, it really took off. I would guess that was short covering or a big buyer stepping into the market. This morning, we were kind of trailing off again in the pre-market here. And then what we saw is another kind of big pop here that took us kind of back to that 252 close from yesterday right here. Now, we are backing off from that as well. But basically, what I'm watching for on natural gas here is pretty simple. All right, what we're going to watch for is a break today of this area right here. So you have this pivot low right here, which is at 262, and this pivot is right here at around 260, all right? And again, those two levels, that area is going to be very influential. If we can start trading above that, you're going to head back on natural gas to 280, then back to 286, and eventually you're going above $3. And I could see 330 to 350 as a longer term target. And I want to show you the daily chart here. Let's erase these little intraday charts, because the daily chart on natural gas shows me where it should bounce back to. See this major pivot low right here, where it went up and then it came down and then it went up and then it came down, then it went up and it collapsed. That would be your retrace to a major level, meaning that if we did go back, this is your target right there. So right around $3.50. Now that's a full dollar higher on natural gas if we can get the bounce that the charts potentially indicate. All right. Now, again, it's not going to happen overnight. So please understand that, it's not one of those things where, it's going to happen that quickly. But I certainly want us to be watching that if we do start to bounce as our target. Let Let me see what else. Let's go to Bitcoin. Let's see what's going on in the Bitcoin chart here. Bitcoin's having a small daily bounce. Keep in mind, we had this beautiful topping tail here, guys. This is a short-term sell signal. And look, 1, 2, 3, 4 down days following that topping tail. If you guys aren't familiar with topping tails and bottoming tails, they're amazing indicators of potential tops and bottoms. Definitely something you want to check out. Bitcoin is getting a small bounce today. And again, the big thing to watch for markets bouncing, look at the dollar. The dollar is up slightly. Watch it on Powell. When Powell speaks, if the dollar pops, you have resistance at 104.20 or so. And again, I do think that the dollar is having a 3-bar surge. 1, 2, 3. You likely, even if you get a little pop here, you're likely going to get a pullback in the dollar. That would bode well for a continued small bounce in Bitcoin and maybe potentially the stock market. All right. So again, any sort of dollar weakness, you should expect the equity market, the assets in general, risk assets like Bitcoin to get a little bit of a pop. All right, next up, let's take a look at Tesla. Tesla's on my radar. It is trading up on the day. The key level I have on Tesla, which is a sell short level, is going to be this beautiful level here, right? So again, Tesla, look at this pivot low, look at this pivot low right here. And again, that is a beautiful maneuver right there, right through here as well. That gives us a very strict resistance level right around 206 on Tesla. So Tesla, again, 206 is going to be your major resistance. If we continue up, and let's just say risk on continues for the next few months, where would we head as your maximum upside? This downsloping trend line would be next. So resistance 1, which is major, again, that would be a shortable level. And then again, later on, if it continues through, resistance number 2, this downsloping trend line, beautiful resistance there. It's been an amazing bounce in Tesla, basically almost 100% off of the lows. But again, you're finally starting to come into some major resistance on the chart. All right, a couple other things here as we go through. I want to take a look at Apple. Apple, again, had a big surge on the back of the reversal on earnings. Now, this was mind-blowing to me. Let me just tell you guys, Apple earnings were not great. They were not good at all. So, we saw a decline in revenue. We saw, different things like that. So to see the reversal on Friday from a gap down and it down as much as 5% in the aftermarket on Thursday to actually a touch of the highs at this pivot high, that was amazing to me. Now, we saw a little bit of a reversion to the mean, kind of reverting back down yesterday. I'm going to watch this very closely. But notice the high on that day matched perfectly the high right here. That now is the resistance to beat, meaning that Apple technically right here is a short unless you take out this line right here, which is at 157.40. All right. So again, use these technicals. This is how a trader thinks, right? A trader does not think, oh, it could go higher. It could do this. Maybe in some weird situation, it goes to $200. A trader uses specific technical levels to guide them. And basically what you're doing by using technical levels is you're using probabilities. So what we know is that when Apple spiked up, it stopped on a dime, like literally to the penny with this pivot high right here. Okay? And so basically that tells us that unless this line is taken out on a daily closing basis, technically, that is your level that you can short up against. So when you look at Apple and you see this mammoth push to the upside, to me, I'm looking to short that level. All right. So again, to me, Apple is a short anywhere in this range up here, as long as it does not close above 157.40 or so. All right. So again, very important to understand how the retail crowd analyzes and goes by their emotion. What's Twitter saying? What are my big influencers I follow on Twitter going about? Are they saying they're buying a new Lambo because they made all the profits in Bitcoin's recent move? And does that get me emotionally like, oh my goodness, I have to chase this move because I want to buy a Lambo? BS. Don't follow that. Look to the chart. The chart is always going to be your truest form of honesty. Okay? And again, that's why I'm successful at what I do and why the people that I teach are successful, because once you learn to control your emotion, you then can focus in on the probabilities, which don't guarantee winners always. God knows I am not a perfect trader, but far from it. But if you can win 7 out of 10 times, 8 out of 10 times, you're going to be a Hall of Famer in this game, right? That's just the bottom line. Everything that you guys are going through, I've gone through. And so I don't want you to feel like, oh, Gareth, look at him, he's a great trader. I was a beginner at one point. I didn't have any guidance. I got into this market $10,000 as a day trader. I lost it 10 times. Okay. And I worked literally, I was like, not going to give up on this. I ended up working side jobs at nighttime, on weekends, doing whatever I had to do to replenish that trading account, not willing to give up. And over time, I learned from my mistakes, and I started to study psychology, and I learned how to read charts, and it slowly came. But I always stress that because I know it's very hard to imagine where you may be to where I am, but I was where you are. So again, it takes discipline. I can teach anyone how to read a bottoming tail and a topping tail, an engulfing candle, a head and shoulders pattern. I can show you exactly how to read an RSI. What I can't do is teach you emotional control. And that's the essence of it, right? That's where you're going to have to dig deep. And eventually, as you learn charts, it helps you trust the charts and get control of your emotions. That's the positive about doing charts. In terms of my Bitcoin, I just want to be clear on this because a lot of people are continuing to wonder, is my analysis still showing, is it going to still go down to the 12 to 13,000 level and potentially 9? And I want to stress that as of now, the larger time frame technicals are still showing that. So be very, very careful. I could be wrong, of course. Again, I am wrong every once in a while. But right now, to me, I would be much more intrigued if this popped and touched 25,000. We have a position in verified investing crypto. I would be unloading that there and then looking for a bigger move down. I think it's very interesting how investors have gotten so bullish on Bitcoin when it's this small of a move. Look at the size of that move and then look at where the all-time highs were. So to be able to claim this is a new bull market, it's a little tricky. And I've seen a lot of so-called fundamental analysis out there that, this must be the bottom, the 4-year cycle, this and that. But remember, the 4-year cycle was under the guise of Fed printing money. They're not printing money right now. So you have to be a little bit open to things changing up a little bit here. Just like, and I want to be clear on this, we had one of the longest bull markets from 2009 to 2021. Why? Was that a normal cycle? No, it was literally the longest bull market we've ever had. I mean, yeah, you had the COVID collapse in there, but that was like 2 months. You really didn't have any long-term bear markets. It was the longest bull market we've pretty much ever seen. Why? Because the Fed was printing money. So there is this impact on cycles that occurs when you have artificial drugs being introduced into the system, i.e. Fed printing of money. So we really have to be aware of that. And I think that gets me a little bit more cautious that maybe the low is in on Bitcoin and makes me think there's still potentially some downside to it.